Okay, now what is China doing? Well, they're simply trying to ensure that the whole idea of socialist and communist policy, I guess, is endorsed. The Chinese authorities, for the longest time, have raised concerns that few Chinese are becoming ultra rich and rest of the population is suffering. It all started with the clampdown in Chinese internet companies, banks, gaming companies, real estate, and now the latest, which almost somebody would say was unthinkable, is curbing power supply and raw material supply. So why is China doing what it is doing? If the biggest factory in the world, which derives its growth from exports, is looking at slowing down, what implications it will have on global supply chain, global trade balance, and other factors. Now let's discuss that, let's debate that with Swaminathan Aiyar. Good morning, Swami. So good to have you back. Hope all is well and you're safe and fine.
Yes. So tell me. Hello.
So my introduction, I guess, was the question in itself. Why is China doing what it is doing?
I think, the ground has been well covered. China, there are two or three different angles to it. One is an internal one. I think Xi Jinping is posing this question of where does China go from now? On the economic side, he sees the need to get away from the current trend where there has been too much concentration of wealth in a few hands, too much chasing after money, and too much ignoring the social aspects, which the Communist Party of China should be stressing. And I think he's trying to assert himself over the party that, we have gone too far down the issue of Deng Xiaoping's thing of to be rich is glorious. Okay, need to be rich, you also need to look after other things. But it's more than that. I think there is a very clear feeling of unease that the Chinese Communist Party will lose control if you have a very large number of ultra-rich guys like Jack Ma who come up and become a force on their own, which will therefore pose a threat in political terms and in financial terms, even in the realm of ideas. And they don't want to lose this particular ground. They want to reassert themselves in this ground. So very clearly, this is a combination of the two. So on the one hand, there is a crackdown on people who are prominent and open their mouths, like Jack Ma. I think a clear message is, if you want to be rich, it's possible. But first, you must make noises about how you're sharing your prosperity. Secondly, you should shut up in trying to give lectures to the Communist Party on how to run things and how to go into the future. Especially Jack Ma complained to the Communist Party, seems to have a pawnbroker mentality and doesn't know how to handle fintech, the new ways of getting directly loans out to small people without collateral. And I think there are a number of dangers in Jack Ma's approach. So I think, in economic terms, many people will say that China was in some ways a highly unregulated economy in some critical sectors, and a tightening of those regulations would have been required in any Western country in similar circumstances. So that is non-ideological, and that is a technocratic thing which needed to be done anyway. And that would be there over and above, as I said, these particular political issues. So on the economic side, I think those are the issues. On the political side, of course, they are having to deal with a new Biden administration, which says that we want to have some kind of conclave of democracies to strengthen their position and maybe take up some position against China. But this is not a Cold War II. Definitely not a Cold War II. In Cold War I, Russia had a separate economic system It has the Comic-Con system, the ruble area. They did not seek to be members of the World Bank, IMF. They did not focus on international trade. They focused on internal trade, on self-sufficiency within Comic-Con. China is very clearly an important part of the world economy, something that Xi Jinping acknowledges and Biden acknowledges. So it's not the old Cold War like against the USSR. But they have, while they have an important trade and investment relationship, political things are going to put a number of limits on the extent of cooperation. In the past, it was any kind of foreign trade and foreign investment was welcome. Now political issues will come in, strategic issues will come in. There will be some limitations, but yet I'm quite sure that a globalized economy will continue. China and America and the rest of the world will continue mutual trade and mutual investment. To that extent, it will not be like Cold War.
Swami, the biggest factory in the world, and we are talking about Cold War One, but the importance of Soviet Union or USSR that time was not very large in terms of a manufacturing hub. The Americans need China more than ever before, and that is a factory of the world. The Chinese have managed to do incredible things in terms of mass manufacturing and innovation and bringing products down. What happens if the factory of the world starts slowing down?
Well, as long as China was doing cheap labor stuff, America didn't bother. The big alert has come that China has suddenly become a major power in high-tech areas. And you suddenly found that China was ahead of America in 5G. China is ahead of America in battery storage and some electrical issues. So, not a single new nuclear power plant has been set up in America. China has set up a string of them, and more successfully than anywhere else in the world. So suddenly the recognition of China as a high-tech power, a power which is now projecting, it has armaments and it's gone into space in a big way. So it is not just anymore a country exporting cheap textiles or assembly of cell phones or assembly of other electronics. That was acceptable. But going into the new strategic area, now the Americans are worried. What about intellectual property? Don't we have to have some silicon fabrication and other facilities at home? Should we not prevent the sale of some Americans? So the high-tech and strategic area, they've suddenly said, this is where the threat from China comes. This is where we must put up barriers. But will there be barriers in general to everything else? I greatly doubt. There is a mutual need for one another. The cutting it off would be too dramatic. And in any case, America is not in the mood to go in and be international policeman or be the international supposed leader of the free world armed with missiles as it was immediately after World War II. The big difference between China and the USSR, the USSR ideologically believed in world conquest. It was a stated aim. China has no territorial ambitions to convert the world into communist countries. No such thing. And so while there are therefore the differences, as you say, in economic terms, China is more powerful than the USSR ever was. And because of its high population combined with high GDP growth, by some measures, it is already the number one economy in the world in terms of total size, if not per capita levels. I will simply say that China will undoubtedly continue to grow. Whether it will overtake the USA in per capita GDP, I doubt. But we need a multipolar world. We are in the old days. You just talked about America and the USSR. There will be China. There will be Europe. There will be America. India will come up. Other areas will come up. So I think economic power will be diffused among a large number of countries, even political and military power. So I am less gung-ho on the theory of polarization of the world, that we're going to get into two different camps. I do see that some political and strategic barriers will come, but I think there will be nothing compared to what we had in Cold War.
Good morning. My other question to you is that, a lot is being written about that is China doing this because it wants the yuan to take over the dollar as the global currency? Is Xi Jinping going from capitalism back to Maoism? But while all of that is panning out and we discuss all of that, Swaminathan Aiyar, how can India seize the moment? At the same time, a lot is being said, a lot of capital will come to India, but this is also the time that maybe India can at least hope to get some of the manufacturing.
India can try. India has a problem that because of its different political constraints, it is not a low-wage country. It is not a cheap infrastructure country. It is not a country with cheap land. If you ask around, if people are to come here, what is the advantage of India? The biggest advantage, I would say, is the size of your domestic market. And because the size of the domestic market is there, once somebody comes and sets up a large-scale manufacturing, at marginal cost, you can export also. So this was originally China's advantage. It is also India's advantage. But as I said, India has its own disadvantages. In real terms, for instance, all those garments and other things, everything gone to Bangladesh. It is not coming to India, and it will not come to India. The cheap electronics, some of that, it may come because on the mobile side and on the component side, the Indian market is so large that when the people come in, taking advantage now of the PLI scheme, yes, you will produce for the Indian market, and the small surplus over and above that, at marginal cost, you will be able to export. So this is the kind of money that will come into India. India is not going to become an export-oriented powerhouse the way China is or the way Vietnam is right now. In fact, the real problem with India has been that until this year, exports were more or less stagnant since 2013. This was your biggest problem. I mean, forget about competing with any, becoming a world power. I mean, Bangladesh was over 90% GDP. If you do not have dynamic, strong exports, double-digit growth, you cannot sustain 7% GDP growth, and you cannot be a miracle economy. So the stagnation of exports from 2013 onwards foretold that, this is not sustainable. If you can't do something about this, your GDP will fall. And the GDP began to fall. It went from 8% to 7, 6, and 4 just before COVID. It's got reversed now. This year, exports at last are growing in double digits. And with that, there is some hope of GDP coming up. So I said, unless India can get its act together and say, look, we are a relatively high-cost nation on several parameters, on land, on interest rate, on our logistics, even the real cost of labor. And we need to do something to reduce the cost of all these and become competitive. I think the RBI has done its bit by saying that earlier on the rupee was appreciating. Now the RBI has come in to stop the rupee from appreciating, and in the bargain, the foreign exchange reserves have more or less doubled. So, that action has been taken. So these are the things India has to do to attract. Now, the sums that we are getting are reasonable, but let's not kid ourselves that we are going to be saved by foreign investment. If you get foreign investment of 60 billion, that's fine, but your domestic investment will be 10, a huge, more than 10 times as much as that. So ultimately, the bulk of our investment is going to be domestic. There will be a useful contribution by foreign investment, which will include links to foreign technology and foreign markets. So it's an important part of total investment. But FDI will always be a very small part of total investment. Ultimately, there is a lot we have to do by ourselves in the sense of making ourselves cost competitive, and in terms of investment itself. That is what will give you growth.
We're also in unprecedented times. It's going to be interesting to see how companies and countries react, whether the Teslas of the world, the Apples of the world, the Volkswagens of the world, they're running out of supplies, chips. Will countries and companies start looking inward, shifting manufacturing bases? But Swaminathan Aiyar, the other problem that we're seeing out of China is, and for example, news just coming in, is looking to increase power tariffs for its industries to try and take care of the crunch. Natural gas prices are going up. Coal prices are expected to go up. Do you see inflation being transitionary in nature? That's been a big debate as well. And then the India impact of that.
Inflation is going to rear its head. In fact, already reared its head the world over. I mean, India is more linked to the world economy on some of these parameters than people realize. The stock market prices are high or other things. So inflation is high in India. It is certainly rising in other places too. It's risen in India. There are some, there's some volatility in India because of food going up and down. But I would simply say, yes, inflation is a threat for every country. We've had so many years of mass printing of money without generating consumer price inflation. I think we are reaching the end on that. And with the reaching of the end on that, we are certainly seeing a very unexpected, unanticipated spurt in prices across the board and its supplies. I mean, look at the ships piled up all over the place. Look at the chip shortages, which people are now saying will continue right till end of 2022. So, there is on the supply side, there is a problem, and on the demand side, there's so much accumulated pent-up demand. The money is out there, and now with the end of the fear of COVID, you're going to get additional demand in India and in the rest of the world. This is a global phenomenon, and India is neither capable of going it alone or will not escape it. Although at the margin, we can try to be a little better. Historically, this has been a high inflation, high interest rate country. And I think we'll continue to be that. All I can say is that the positive part of it is that it means there is now very, very strong demand. And the strong demand will translate into much higher investment all over the world, including India, which can be a spur for growth and be a spur for trade. So these are the positives. But yes, inflation by itself is a dampener, and we need to take care of that. But it's worth saying that there is a silver lining in that. That is now reflecting strong increase in global demand. And that is good for India.